Thank you for joining us for today's Ipsos webinar, exploring food service sector insights from our annual Vantage Outlook report. Today's webinar is being presented by Asad Amin, and you can read more about him on the slide in front of you. So now, without further ado, it is my pleasure to welcome Asad Amin, Senior Vice President and Head of Syndicated Solutions for Ipsos. Asad, you have the floor.
Thank you so much, Ellen. Afternoon, everyone. Happy Friday. I hope everyone's doing well. So today we will cover our latest trends from our annual Vantage Food Service Trends Report. It's the 8th annual release, and there's lots of interesting information I'd like to share with you. Now, it's the first time in the past several years, well, at least 3 years, that we've been presenting that we can finally put the pandemic in the past sense. It's ideal that we could completely ignore it. Maybe in our heads we'd like to, but it's still kind of there. But there's lots and lots of things to celebrate about when it comes to food service. The industry's been growing since it bottomed out around March 2020, right at the start, double-digit every single year. And there's lots of positive momentum, a lot of positive changes that we're seeing taking place. Having said all of this, as much as I'd like to completely post a rosy picture of the current situation in the industry, there is a sense of reluctance that we're starting to see among consumers and diners already. What we've seen from all of the trends that we've tracked within our food and beverage trackers, in addition to our global trends that we track from Ipsos, in fact, we had a pretty massive client event yesterday, which gleaned a lot of the information from it, which was a huge success, really allows us to understand what's been going on. And one of the key themes we've seen as kind of a residual impact of the pandemic is that consumers were pretty much forced to become fairly simplistic in their lives, in the sense that they didn't pack all the commutes, all the different agendas and routines and social kind of obligations they had. And as a result, as we come out of this, and in some ways have, I think there's some impact of that still in place, where we want to try and maintain some of that as much as we can and hang on as much as we can. I think a lot of the things we're seeing with in-home workers or the traffic that's kind of dissipated around lunchtime is attributed to that overall as well. Two other important things to consider immediately is inflation remains top of mind, and we'll kind of unpack exactly what's going on there as well. But at the same time, on the other end, consumers are looking to enjoy themselves more than ever, especially when it comes to dining out. It's been a long time since they've been able to completely do that in full swing, but that's kind of the balance and the trade-offs that they're trying to manage as well. There are also long-term trends that still have kind of percolated to the top. I've heard from many people, and I've heard over time that food service is really driven by cravings, and that's true, but you cannot ignore the growing trend of health and wellness and the layers beyond just nutritional impact, as well as the hot topic of ESG as well. Similarly, just to be clear, none of these slides or the presentation was done by ChatGPT. It was done by the Fab team, a lot of hard work being put into it. But it's obviously very topical, and I think the reality of what we've seen in terms of the adoption rates on digital channels throughout the pandemic has been seismic. So it's something that I don't think we can completely ignore. Sorry, I think the slides seem to have gone off. Just bear with me. Okay, continuing on. Well, there's another technical dimension to keep in mind. Just the dependency of still digital platforms. Other things also that you need to keep in mind long-term that's going to have an impact is the changing cultural landscape that we've seen. We've got around 1 in 4 Canadians that are new to the country. That's a pretty sizable amount of Canadians that have different palates, different tastes, different experiences, and I think that's something long-term you still have to be mindful of. And finally, a topic that was discussed in depth yesterday was around authenticity. And I think the theme here is that it's important for you to understand and empathize what the needs of your consumers are. Only once you do that, then you can walk the talk and really cater to exactly how much all of that has changed over time as well. Now, in the next 40 to 45 minutes, what I'll be covering is giving an update of what's happening at Foodservice, a fairly clear standing point of exact performance over the course of last year and exactly how things have been trailing out in the first quarter. Hot topic around value, what does it mean? And then potentially how you drive that as well. And hopefully by the end of it, what you will see is a clear path in terms of how you want to navigate through the next coming year and beyond. There are lots of trends, kind of presentations, topics available. What I wanted to make clear is everything we have is grounded on data and information. We have within our arsenal 3 long-standing, decades-old consumption trackers that measure how Canadians eat and drink. What we've primarily sourced our information from is the Foodservice Monitor. But in addition to that, we have access to a whole number of other reports at Ipsos, which really gives us kind of a validation of the big picture trends that we see. For the purposes of the report and the presentation, usually we would look at year-over-year shifts, but I think that really hides the bigger picture of how things have played out since the pandemic. So we'll look at how things were prior to, and really that'll be the main comparative point. But we'll also see how things have played out since the latter part of the pandemic in 2021, and then really looking at what we've coined within the food and beverage group, the pandemflation kind of period. These are, again, that point where we're coming out of the woods, but then we have external pressures that are just keeping things fairly uncertain. So let's start with overall performance for the industry. On the surface, things are looking amazing. I mean, obviously, when things were pretty bleak right in 2020, when you're looking at these growth numbers compared to a year ago, they're huge. Dollar sales are up close to 30%, and traffic overall for the industry is up by 18%. But that's why it's important for you to look backwards and see how things were prior to the pandemic. When we're looking to 2019, dollar is still up around 11%. So you're seeing double-digit sales overall for the industry. But it's in the traffic information where you can see that we are still behind where we were prior to the pandemic. And if you look at these two numbers in terms of overall sales versus traffic, the gap is mainly attributed to higher check and higher prices that operators have had to provide because they themselves having to pay more in terms of their ingredients. So in some cases, the dollar sales obviously are inflated, and traffic still isn't back to where it should be. It's getting closer, it's not far off, but certainly that's one wide gap to be mindful of. And if we look at overall food service traffic by each of the operator types, from QSR, full service to retail and other, you can see the same theme. Obviously, compared to last year, traffic is up. But again, compared to pre-pandemic times, it's still below where we would expect. So there's still a gap to close. And the challenge and the biggest question is, are we ever going to close it? Most likely, eventually, we will. But there are other things that are keeping that gap apart. The other thing to keep in mind is the traffic growth you can see for full-service restaurants. We're going gangbusters because they're the ones that were impacted the most prior to the pandemic. Dine-in was closed. Same thing with retail and other. We're talking about immediate consumption channels like HMR and convenience and gas. Those have also come back in full resurgence. But again, that traffic compared to 2019 is still below where we'd expect. Now, if we look at the trend lines in terms of overall sales for full service and QSR, and we look at a monthly basis, I mean, first of all, I think it's quite interesting to see how things kind of trended downwards right during any of the lockdowns. But I think it's important to see exactly how things have played out last year. So through most of summer last year, after Omicron hit, we saw pretty strong growth. And you can see actual sales levels were similar or higher than it was prior to the pandemic. But then once inflation hit, you can see things are kind of petering out. Now, that was when inflation peaked. If it peaked, how come traffic's going down? I think there's still a lot of residual effects just in terms of inflation, in terms of how consumers are still behaving and being impacted right now. I mean, we're all still seeing it, we're all still feeling it. So I think those are some of the things to unpack in terms of what else is going on. A couple of other points in terms of overall market performance, compared again to that pre-pandemic period to our current pandemflation era. If we look at each of the channels, starting with takeout, you can see with the focus on off-premise, primarily takeout, still is winning by far. I mean, close to half of all occasions at food service are driven by takeout. Dine-in, on the other hand, dropped, obviously, right at the second half of the pandemic, but it's come back. It's still not back to the levels you would expect. Instead of around 30%, it's around 25% overall. And then some of the other channels, such as drive-through, as well as delivery, obviously right at the middle of the pandemic when social distancing norms were still in place, they were at an advantage. But both have kind of trickled back in terms of overall share. Still, you can see it's higher than where it was pre-pandemic, but there's that impact that you have to keep in place. I think the main thing you can see is that 75%, so 3 in 4 occasions for food service traffic are all driven by off-premise. So you cannot ignore the opportunity and the size of off-premise occasions, even if it's not within your wheelhouse and what your strategy or target is. Last point in terms of overall food service performance trends is around day parts. And again, that's where we're also seeing things haven't gone back to where you would expect. Breakfast overall, relatively flat. We're still working from home. What you're seeing a lot of coffee traffic are from either local commuters or some that are actually going back into the office or your neighborhood. That's driving a lot of that volume. Dinner has been the focus, still holds the largest share, and it's grown. You can see where most of the focus was for dine-in. That's where delivery obviously is overdeveloped. And clearly what we don't see moving back, and we've seen for a while, is lunch. Urban centers, office traffic, business lunches, all of these are not near close to the levels you would have expected prior to the pandemic. So that's obviously having an impact on that particular day part. And this again attributes to the point of that gap between 2019. You can still see there's still enough factors in place where we're not back to where we would have expected. So I think it's important to see that there's a number of factors to kind of drill down in terms of why we aren't back to where we are in 2019. And I think it's still important to understand what is happening with consumers overall. So let's unpack that. I think one of the biggest factors, obviously, we've talked about is that of higher prices. If we look at inflation levels over the last couple of years, say up to 2021, on average, they've hovered around 1.6%. So as of the beginning of 2021 to the middle of last year, that's when it kind of spiked and then peaked around June of last year. Fortunately, since then, things have kind of started to go down. However, if you listen to pundits and everyone's trying to figure out exactly how things are going to play out, I think Bank of Canada said that by summer, hopefully it'll be around 3%. But then, I think a lot of people are saying that they're going to look, or a lot of economists are saying that they're looking at core inflation rates. If things change, they may have to raise interest rates. So I think when you have these types of mixed messages, consumers are obviously a little confused and apprehensive and uncertain. And as a result, they are really sitting by the sidelines or sitting on the fence in terms of a lot of the decisions they want to make. And we have a lot of proof of exactly that. So when we look at top concerns among Canadians, we can see over the course of last year, COVID concerns have kind of gone off the cliff, which is a good thing, right? It's really, again, still if it's in our heads, behind us. But when you look at economic uncertainty and inflationary factors, that's hands down the #1 concern among Canadians, and it continues to grow. So that's one factor you cannot deny that Canadians are still thinking about this, even though we saw that from the previous chart, that inflation had peaked around summer of last year. This is still affecting Canadians. They're still thinking about this all the time. And when we talk about diners specifically, there are several consumer sentiment questions we have. We know that diner optimism levels, so top 2 box scores of diners saying that they're going to enjoy life more than ever, it sits at 31%. Now that's softened. And on the other end of the spectrum, when you look at economic uncertainty, also sitting at 31%, has grown. And one thing I've been saying for the last couple of years is that, how do you know if traffic's going to trickle in? Well, in most cases, if there's a gap between optimism and pessimism, there should be some level of traffic. There's still some gap to that, but when we're looking at optimism and diner optimism versus their views on economic conditions, it's kind of closed that gap between the two. And again, you can see why diners to some degree are reluctant and hesitant at this time. Now, the important thing is that the impact of inflation is not the same across everyone. There are differences. It's not a blanket statement. So if we look at traffic trends over the course of the last year at least, and we look at by some key generations, starting off with boomers, they're trending down, but it's still relatively positive compared to some of the other generations, as you'll see. Now, boomers still are driving the primary amount of traffic, followed very closely by millennial cohorts. Subsequently, when you look at Gen Xers, also fairly steady, but you can see they're starting to taper off. And it's really those Gen Z, those younger cohorts that are really tapering off in recent months. And again, we've seen this from media in terms of the tightening of their purse strings that they have, the disposable income that they have limited to, and the impact they're going to have on discretionary spending, which again, we know from a number of our data points as well. All are going to have an impact on their ability to go out. And we're seeing that hard data in terms of traffic levels. And that's where some of the softening we're seeing in the latest quarter, at least, are coming into play. What's interesting is that when we look at, the consumer sentiments among the younger cohorts, there's pent-up demand. There's a level of optimism still, but the reality is that they only have so much money to spend, and they have to be careful exactly how do they want to spend it. So it's a balance between their overall needs and desires versus the reality. And I think that is really the tug of war that the industry is dealing with. You have food service operators, restaurateurs that are trying to tighten their margins, and at the same time, or having tightening margins, and on the other side, you've got diners who are looking for deals, and how do you drive traffic when your ingredients keep on going up? You already have really, really low margins, and then diners are looking for even more beyond that. And I think, from what I've heard from many, many of you in the industry over the course of last month, I think it's been pretty consistent, universal, and a critical pain point in terms of how do you drive value. So let's unpack that theme a little bit further. First, just looking at the information we have, when we look at visit drivers within our data, we know that 1 in 5 occasions at food service are driven by the need for having value. And that breaks down into various other motivations as well. What we know is that's gone up around 4% versus 2019. So certainly it's important, and that's pretty sizable compared to a lot of the growth rates we've been seeing. On the flip end, deals are basically kind of offers and promotions consumers can have, and 29% have actually used them when they go out to eat. But that hasn't changed, and potentially because maybe those offers haven't been made available as much as before. So a lot of operators could take advantage of that, maybe offer deals so you can glean and gain additional market share in the short term, but then you're still being affected by impacting your margins. And that's one of the challenges that we're facing. There's lots of ways you can do that, whether through combos, loyalty points, coupons, and this is in ranked order in terms of the top value drivers that exist. But the challenge is how do you try and mitigate the fact that you already have low margins, and is there other ways to try and drive value beyond price? So we'll come back to that. Another quick point on value in terms of trends we've seen is that QSRs are the ones that are primarily driving the deals, which has always historically been the case. They're always higher in terms of indexing versus full service. However, full service restaurants are even lower than usual. And the challenge is when diners go out to eat, where they're seeking value the most is at full service restaurants. Obviously, if they're going to have to spend more, they're already kind of got a stiff neck in terms of how much they're going to want to spend. And any opportunity they're going to seek value, that's what they're looking for. And that probably justifies which places they kind of choose, potentially. And if we look at different cohorts, and as we've seen in terms of lower traffic among that Gen Z cohort, it's the younger cohorts that are seeking out value more than others overall. But the flip side to this kind of frugal mentality among diners is that they've really been suffering for the last 3 months. And a lot of these things weren't because of them. The pandemic wasn't because of them. Inflation wasn't because of them. And I think a lot of them are pretty much done. There's a point where they want control because at the end of the day, they've had to stay indoors. They haven't been able to connect. They haven't been able to experience something as simple as going down, dining out to your favorite neighborhood restaurant. And now on top of that, they have to suffer because of higher prices. So I think this balance of demand that they're seeking is going to be something that we need to be very mindful of, especially in the next coming months. I mean, if we think about this might be the first summer where diners probably won't be concerned about getting infected. Or you look at the weather right now, I mean, it's right at the beginning of a pretty miserable winter. So there is likely going to be some level of demand for it. And it's just a matter of how do you cater to that as well. So one thing that a lot of things I'd heard as well, that, well, maybe they're trading down from full service to QSR. So full service in the short term is going to suffer because fast food restaurants are cheaper. Well, when we look at consideration levels, so when diners pick a particular restaurant, we ask, well, what other restaurants would you have considered? In most cases, those numbers are fairly small. But when we look at full service diners, around 6% would have considered a QSR. Small, but in relative to those QSR diners that considered a full service, it's still higher, which makes sense. Like you would probably go to a fast food place if you didn't want to go to a sit-down restaurant overall. Now, if consumers want to trade down more prior to 2019, that 6% should have grown, right? More would be trading down to QSR now more than ever. However, what we're seeing compared to 2019 is the opposite, which validates the point that diners still want to go out and have those experiences. They're not necessarily trading down because they've been waiting for long enough to have those experiences. The only thing holding them back right now is price. And that is something that I think they've tried to figure out, how do you mitigate and go around? And what we're seeing is two things. One is that average party size has shrunk. It's shrunk around 2.3% compared to prior to the pandemic. And this differs depending on channel, depending on operator type. Obviously, the shrinkage within full service restaurants are higher. People are going for maybe more intimate occasions, less people. Interestingly enough, when we look at in-home delivery occasions, party sizes are growing, perhaps because they are justifying the additional spend they might have to do. But the biggest factor that we've seen in terms of decline is the average number of items ordered has shrunk considerably. It's down around 7.4%. So, this phenomenon of why consumers are not giving up their expensive venues and not sacrificing the type of occasion or the item could be drawn to what we could say is the lipstick effect. So this term was popularized by Estee Lauder chairman Leonard Lauder. So he argued that small indulgences have some level of protection from tightening purse strings as people still try to treat themselves, even if they give up big purchases. So what you're seeing is that they don't want to give up those experiences. They don't want to stop going out to full service restaurants. But if they can have those small wins and those small indulgences, they'll have that trade-off. And what they're doing is they're focusing on specific menu items that they might have ordered before that they're giving up. They're not going to stop going out, let's say, to their favorite neighborhood restaurant. So if we were to look at exactly what they're giving up in terms of the menu, what consumers are doing are they're honing in on the center of the plate. So if we look at growth rates for specific types of menu items, we're seeing that entrees and sides are the ones that have grown prior to the pandemic the most. And when we're looking at peripheral menu items, beverages in particular have had the hardest hit. And then even appetizers and desserts to a smaller level have been kind of passed on. And I think this is really important for you to understand, well, if I was to have a tactical strategy trade, this is where you potentially need to focus on. But then how do you try and leverage any of those side items as well, beyond just the center of the plate? But at least you're clear in terms of what diners and consumers are trading off on. Now, not all beverages were given up. Now, remember, we had hit bottom in March 2020. Things are only going to have grown since. So actual orders for beverages are up. What we're seeing is a shift between what's been growing and what's been declining in terms of share shifts. So top declining categories, brewed coffee in particular has had a pretty major hit. Tea, juices, bottled water as well. Part of this is attributed to traffic around breakfast, some of the softening around drive-thrus as well. But really, it's also a trade-off. and some of the generational shifts potentially as well, where we're seeing hot specialty coffee, ice cold coffee growing significantly, and carbonated soft drinks are actually gaining ground in terms of share shifts. Alcohol in general is fairly flat, but you can understand in terms of trade-offs, the benefit of carbonated soft drinks in this environment might be an easier trade-off overall. So how do you figure out how to strategically or tactically play in this environment? So we said that obviously entrees are center of plate. So let's take that as a starting point. And we also talked about the lipstick effect, where consumers still want to have those small wins or small indulgences. So if we focus just on entree menu items and we kind of populate that into a quadrant. So what this looks like is the value need, which is in your y-axis, and say craveability, which is in your x-axis. What we will plot here are different types of menu items depending on how well they're developed. And really what we're looking for is which ones fall into the top right quadrant. And what we see here are, as you would expect, now we're looking at total food service, menu items at a high level that usually are dominated by QSR are obviously the ones that benefit the most on that right quadrant. They really are more overdeveloped for craveability as well as value. Now, another important thing to note is, these are all portable too, especially when you consider the entire off-premise dynamic. That's probably another factor in terms of what's driving that to be optimized there as well. What's interesting beyond your burgers and your pizzas are some of the nuanced differences between these categories. So there's a bigger appeal for, say, hot sandwiches than cold overall, perhaps in terms of value that's perceived. And also, especially for full service, it's interesting to see chicken entrees are stronger relative to, say, beef or seafood when they fall into that equation. Now, this is just at the surface level. There's more that can be broken out down to granular menu items by operator type, by channel, by cohort. So the point is that there's lots you can do to play with the environment that's in the field, especially if you want to try and optimize menu items and what appeals most to consumers. Now, beyond value, I think there's a really important component about the in-home piece that everyone needs to be aware of in the industry. In-home has been, big in terms of size for some time. Off-premise has been growing consistently even prior to the pandemic. But the added focus that we've had and the habits we've developed over the last 3 years really emphasizes the importance for you to understand exactly what's going on there. Because now you have all of these occasions that didn't exist before. There's still a gap between where traffic exists now to where it really should be. And it all seems to be hovering around in home. So if you understand exactly what those occasions are, what those needs are, maybe it'll help you unlock how to get those consumers back to restaurants, or figuring out other new strategies to kind of unlock what's really driving in-home consumption. Now, as part of our annual CHATS trends report, which looks at consumption across all venues, not just food service, Kathy Parada, my coworker, devised a term called the value trigger, which looks at both value for money as well as saving money. This has been really effective to a lot of our manufacturer clients that we've spoken to over the course of the pandemic. And we know that all consumption occasions, irrespective of in-home and out-of-home, about a third of them are driven by this value trigger. Now, when we look at the difference between in-home and out-of-home, you can see that these are higher for in-home occasions, which is kind of expected. Now, when people seek value relative to food service, there's a stronger value play in home, and you can see the appeal for in-home occasions during this environment compared to food service. Now, it's important to understand that it doesn't mean that value doesn't play an important role at food service. It's just in relative terms to in-home occasions. There is another area that you're competing with in home that is more appealing to consumers overall. So I think the important thing to consider here is that if we were to unpack what's driving value, both at food service and at home, what else can we learn that might be important of what defines value? I think if we were to say lower price, that's an obvious move, but one, you have an issue of those thin margins that we were talking about. And the other is it cheapens your value proposition. You don't want to necessarily do that. And value is kind of somewhat a nebulous term. It's obviously related to price, but what does value mean? It could mean lots of different things depending on the environment and the person. So what we did was we looked at consumption drivers when people are seeking value when they're at food service, and really what stands that apart. And really when we see what is value at food service, it's primarily driven by experiential factors. Obviously the indulgence, the craving, and what they're getting is there. But again, that authenticity and really what consumers are craving and they're seeking that's somewhat of a value point as well. And then anything in terms of something new, being able to share as well, and again, family occasions are things that are driven by value at food service and really are things that food service can own. Now on the flip side, when we're looking at in-home occasions, other needs that are driven by value in home are related to one, convenience factors, but really when we look at a lot of the health and nutrition, freshness, ingredient, feel-good factors, ethical choice, you can see there's a skew towards general health and wellness drivers at home that really define value. So, what do you do with this? How do you action it? Well, when we're looking at food service, if you're looking at the points on the left, you can see these are things that really food service likely owns when it comes to value. On the right, it gives you some ammunition of really what the appeal for value at home is for consumers, but maybe there are white space opportunities for you to kind of expand and grow into. Or if you think that there is a way to provide value for any of these needs through what you're providing, that's something you can latch onto and maybe then also seek traffic from home to yourself as well. Now, a large percentage of our population still continues to work from home. And that's, again, one of the other reasons to not ignore what's happening at home overall. The shift from 34% to pretty much even higher to that in the most recent period is pretty seismic. There was some change around summer of last year, but it's pretty much gone back to where it was. And when we're looking at people that are working away from home, it's remained pretty much the opposite direction. So unless things change, and I know there's lots of appeal and friction among government workers about a lot of those changes, it's going to be something that's going to be tough to see how things will play out. And irrespective of that, I think hybrid environments for some time will remain in place. So I think it's important to figure out, well, what are the ways that you can figure out what's going on at home? Are there steps you can take and understand what you can do to leverage those occasions? When we look at food service occasions eaten at home, it's actually grown considerably over the last 8 years. About 8 years ago, it was around 1 in 5 occasions of food service that was actually eaten at home. Now, the pandemic, at the height of it, is around 45%, close to half of all food service occasions were at home, which made sense. But even now, in the course of last year, it's close to 37%. So that's more than a third of all food service traffic going directly to home. And if it's that big, if we've talked about that 75% of traffic is off premise, it's something you can't ignore, even if it's not something that might be top of mind. If you're looking to leverage growth, if things are kind of pausing or slowing down, or you just think long-term opportunities, what can you do to understand what's going on in those occasions? So what we've done is fairly simply looking at, well, what are the different types of activities and day parts that break out when consumers are taking restaurant food back home? And what you can see is the top 4 kind of occasions account for 60% of all traffic. So those 4 occasions alone make up the vast majority. And where they are primarily in the evening or in the afternoon. Activities range from either watching TV or pretty much focused on what they're eating or again, with partners or with the family. But think about what you can do to dial this in further. What are the differences by generations? What are they eating? What are the channels that they're using? Are they ordering delivery or is it primarily takeout? This is what will allow you to figure out, well, how do I reach out to each of these groups? Which one do I focus in on? Are there additional opportunities for growth in these areas? And maybe even figure out down the road what the communications and messaging might be for each. Delivery obviously has been an area of interest, and obviously something that caters to all of these in-home occasions. So when we look at traffic compared to dine-in, again, if we kind of stabilized it out looking rolling 3 months, obviously fell through a cliff right at the beginning of the pandemic, and slowly, gradually has been coming out, and recently has been more or less flat. Now, if we put in delivery, and this isn't to scale, but just to give you a sense of these two trend lines, you can see there's some level of correlation between dining in and delivery. Now, delivery has started to soften, but it's still higher than it was prior to the pandemic. And there is some interesting points to take into place in terms of that opportunity still exists. What are the optimal day parts, consumers, menu items, and even partners that you can speak to try and optimize there as well. And as much as some of these things might be changing, you can't deny the importance of digital orders. Digital orders, whether through an app or through online channels, have grown by 155% compared to 2019. You know, when you're looking for areas of opportunity and growth, and when you have this channel accounting for $15 billion worth of potential revenue, just imagine how much you're leaving off the table by not having a play here. And there's lots of additional benefits as well that I'll summarize right towards the end. So I think there's enough information here for you to try and think of and leverage. I think there's really 3 things that you want to know if you want to stay ahead of the pack. The first is basically, I'll start with the end in mind, is you have to figure out how to leverage technology. And this isn't just about the apps, because they benefit. Obviously, communications directly to your guests. We know that promotions skew higher for digital channels. And there's obviously all the information you'll be able to leverage and manage as well. But beyond that, there's efficiencies. You know, it allows you to have an edge towards your competitors. And moreover, there's other things such as social media that you can leverage. I've seen a lot of small mom and pops done a pretty phenomenal job really targeting and resonating with, again, that elusive Gen Z cohort. There is a brand called Tahini's, which has locations outside of Toronto, which has just a funny kind of nonsensical promotion that they have with the owners on Instagram. And the level of knowledge and awareness that Gen Z has on that brand is huge. It's not difficult to do. It's fairly, you know, cost efficient, but it's, again, a channel that obviously resonates, and it's the type of, again, authentic message you can communicate overall as well. Focusing on value and not price is really the most important factor. Sure, you can continue to take price and look at low margin categories, but I think we've seen that there's other ways you can try and do that where you don't have to give up those margins. When we're talking about value, you can consider the entrees that we focused on. If that's what consumers are honing in on, well, how do you leverage that? And maybe use that to pair other opportunities or drive high margin products there as well. Similarly, in terms of some of the other needs that we've talked to that's driven by value, how do you leverage that? How do you kind of optimize your positioning there? And really trying to figure out what can you do that won't necessarily take additional price overall as well. And again, that point about that lipstick effect is that consumers are looking for small indulgences. So you don't necessarily have to take price overall. There are other ways to go about it because the demand exists from what we've seen. And last but not least, I think really important is that you have to adapt. I mean, things are changing at such a rapid pace. And there's a number of factors for that. We've seen generational shifts. We've seen cultural shifts over time, and that's only going to accelerate. And with that, whatever you've targeted to before, however you've tried to communicate in the past, you have to think about shifting that over and think of new ways of understanding what the needs of the new generation and new kind of market is and what the appeal is. Subsequently, also the occasions. If a lot of them are off premise, if a lot of them are in home, what do you do to try and cater to that? If we aren't getting lunchtime traffic into the offices, well, when people, or I guess workers, do come in, do you try and leverage promotions for large groups whenever they have massive meetings? And if they're at home, well, if they're in suburban environments, how do you cater to those needs so that at least they can grab lunch even if they're working from home? Because again, it's some of those kind of moments that people still want to experience, and then you can still leverage overall as well. I think what I want to leave you with most importantly is that understanding the needs of consumers are really imperative. And I think the point is that, consumers and diners don't necessarily want to abandon the industry. In fact, it's quite the opposite. But you have to figure out how do you draw that lifeline to them. And again, understanding what those needs are, what those underlying trends that are driving those changes in behavior are really important moving forward. With that, I'll close. Thank you, everyone. The Vantage 2023 report will be released May 12th. If you have any questions, you can reach out to myself or Kathy Parada, and we would be happy to address any questions.
Well, Asad, I have a feeling that you covered it so in-depthly that at the moment, we don't have any questions coming in. So I really want to thank you for the thorough and really interesting presentation. I love that we did it on a Friday. I feel like I'm easing into the weekend and gonna hang out at my favorite coffee shop. Thank you everyone for joining us. And of course, we welcome the opportunity to speak with you. So feel free to reach out to us directly. And that concludes today's webinar. Have a wonderful day.